We are here. Good morning, good evening, good afternoon, traders and students all around the world. This is Fxpassion, broadcasting you live on TradingView. And if this is your first time, everybody, what we are trying to do here, we are trying to build a strategy and or a system for us to understand, easy to obey. We are trying to understand how risk management works inside our strategy and or system. And number three, the big one. We're trying to understand how our psychology affects number one and number two. But before we do the strategy and or a system, we need to understand all of this stuff here, right? The modules, basic module, market structure, highs and lows and trends. Beginner module, trends, trend line, support, resistance, pivot points, intermediate module. But remember, all of this, it's beginner stuff, okay? No fancy, advanced, professional trading here. Okay, we are beginners trying to learn the basic stuff. Remember that 90% of traders, everybody, lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. Either way, don't trade with money you cannot afford to lose. And for questions or homeworks, everybody, TradingView house rules apply. You can contact me in private chat. I cannot share any information here during the stream. Please allow 72 hours, okay? And never forget, having 2 skills is better than, and having 3 skills is better than 2, especially in times of uncertainty, and trading is a learnable skill. Okay, you can learn this, everybody. And good morning, Slaterino. How are you? That being said, everybody, let's dive into the... Okay, and let's open another one here. Just give me a second. And everybody, this is going to be one of the lessons that you should watch 2 or 3 times, okay? And low chart layout, trading view, class 1-1. And we are going to start, right? Okay, so let's remove the drawings. Let's go on the monthly chart, right? Monthly chart. First, we are on euro dollar, right? Euro dollar. Okay, we are going to open EuroCAD this time, EuroCAD, something like this. Okay, and here, clicking here, and let's start learning, everybody. Okay, text. Now this is a concept. Okay, it's a concept. Every currency pair has its own market structure, okay, on every time frame. I'm going to explain everything, everybody. Okay, this is number one. It's a concept. As a beginner trader, we should learn that every currency pair has its own market structure on every time frame. So every different time frame is going to have a different market structure. Okay, Passion, what is market structure? Calm down, you know. Give me a second. Every currency pair has its own market structure on every time frame, and also, you know, another concept, another concept. You know, every currency pair has its own short-term trend on every time frame. Okay, and everybody, do you have any questions from yesterday and from previous days? Talking about what is market structure, talking about how to identify high and lows. Have any questions about this, everybody? Prince and Liana, bro, why this guy bookmarking NZDCHF? Why not? Why not? And Princess Liana, focus, okay? Focus on the course. Robin, sometimes there is a fake high. Do I avoid this? We're going to explain, everybody, okay? Those are different concepts, everybody. So every currency pair has its own market structure on every time frame, and every currency pair has its own short-term trend on every time frame, okay? So, and one more, right? One more. Every market structure starts with an extension. Okay, this is going to help you. Every market structure starts with an extension, and you don't want to hear this, everybody, but star, the smaller the smaller the more challenging, I hope my English is correct, the more challenging is to identify the, okay? So those are the concepts, everybody, that we should learn as beginner traders. Okay, concept number one, every currency pair has its own market structure on every time frame. And so in an uptrend, you know, we are going to have the first extension. Let's color code this in green, something like this. And or blue, right? Blue, okay. Be the first extension. Then we are going to have a retracement. Okay, and then we are going to have another extension. So this is what it's called an up market structure. Okay, and new vocals, we have a structural low, then we have a structural high, we have a structural low, and then we have another structural high. Okay, structure, you know, so we are going to have this one. This is going to be the extension, right? Extension. Let's make it smaller, like 16. Okay, the next step. This is going to be the first retracement. Let's put it here. Okay. Retracement. And everybody, this you should do 2-3 times minimum. Don't be so naive, everybody, that you are going to get it and learn this just watching one stream. Okay, no, it's not about intelligence. Our brain, everybody, cannot take in and remember information. So extension, clone, and there you go. Retracement, extension, retracement. Okay, nothing special, you know, right? Nothing that difficult. So this is one. We have an extension, we have the retrace. Now, how are we going to identify the correct structural highs and lows? Here the second concept comes in, and the concept says every currency pair has its own short-term trend on every, okay? So when the extension is going to start on the monthly, on the weekly, on the daily, on the 1 hour, 2 hour, 4 hour, whatever chart, what we are going to see, everybody, we are going to see a short-term up, going to higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. When the extension is going to be over, because the market, it must wave, it must retrace, then the short-term trend is the short-term uptrend, but it's going to change from the uptrend to the what? To the short-term downtrend, correct? So the market is going to start pushing down in the short, lower lows, lower highs, lower lows, lower highs, until it's going to find some kind of support, pivot point, or whatever we're going to learn. And because the market, it must wave, and this is structure, is going to change the direction of the short-term trend one more time. It's going to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, makes sense, everybody? Is this too difficult? Am I too fast? Do you have any questions? And don't be shy, everybody. There is no right or wrong, right? Please ask questions. Okay. Now, here is the kicker, everybody. And I'm going to repeat this 2 or 3 times. Because of the short-term trend, is it possible that we have a currency pair that it has an up structure, but it's trending down? So we have, when the market starts to retrace in an up structure, we are going to have an up retracement. New vocabulary for the beginner trader. You know, we are in an up structure, the blue lines, structural low, structural high, structural low, structural high. We have an up structure, but if the market would be here and making lower lows, lower highs, lower highs, so this would be an up retracement. Everybody, make sense? Up extension. No, it's not down, it's an up retracement. Don't confuse the two. This is an up retracement. Okay? Oh, passion, but it's retracing down. I know, but this is the vocabulary, you know? Up retracement, down retracement. You're going to learn this, everybody. Don't worry. Okay? Or at least this is how I learned, you know. And as we are telling you, you know, you can accept what we're teaching you. You can reject, you know, take what you like, you know. If you have different vocabulary, it's all okay. Now, in a down structure, it's going to be the same. We're going to have that first down leg, which is the extension. Then the market is going to push up, 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 right? This is going to be a down retracement. And lastly, the market is going to push down one more time. And this is a down structure. We have a structural high. We have a structural low. We have a structural high. Something like this. And we have a structural low. Okay? And one more time. Passion, how are we going to identify when we are in an extension or when we are in a retracement? The answer is we are going to see a change in the short-term trend. So extension, the market is making lower lows, lower highs, lower lows, lower highs. Then at some point in time is going to retrace. It's a must. We clarified you yesterday. This is one of the few certainties in the market. The market, in order to wave, it must make extension retracement, extension retracement. How big, shallow the extension, how big, how deep, how shallow the retracement, this is another story. But the market, in order to wave, it must retrace. So down retracement, market making higher highs, higher lows, higher highs, higher lows, right? Until it's going to support, resistance, pivot point, you know, whatever. And then it's going to start pushing down one more time, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So we as beginner traders many times where we lose here and we lose here, right? Let me see if this line works. Click, click. Okay. So maybe we as beginner, you know, because we are buying a short-term uptrend, but we are not aware of the down structure on every time frame. Every time frame has its own down structure, has up structure. Make sense, everybody? So I could be seeing on a 15-minute chart, on the 1-hour chart, or the 30-minute chart, an uptrend, you know, and I would be buying market in an uptrend, and I would lose because I was not aware that this uptrend was nothing more than a down retracement. I just said wrong, right? This uptrend was nothing more than a down, okay, of a down structure, and in the up structure is the same. I could be shorting, you know, like what's the pair right now? GBP USD, it's a great example, you know. I could be shorting on the 15-minute chart, 1-hour chart, you know, a downtrend, and I would lose because this downtrend, you know, this short-term downtrend is nothing more than an up retracement of the up structure. Two questions. Number one, does this make sense to everyone? And do you have any questions? And this is why I'm telling you, watch this recording 2 or 3 times. Don't be so naive, everybody, that you are going to get it just here, you know. Of info. No, it's not about intelligence. It's not about the age. It's not about the skin color, you know. It's not about religion. It's not about our brain cannot sustain that much information. Says it makes sense. Vincent says it makes sense. Okay. Now, the next is, so with this short-term uptrend that is changing, and with this short-term downtrend, the next level of understanding is we must learn that not all highs and lows are equal. Okay. And one more time, you know, new vocabulary for you, everybody, for the beginner trader, you know, relevant highs and lows, okay, which are the structural highs and lows. Those are called the relevant highs and lows when we are talking about and addressing market structure. And then we have the other highs and lows that are not relevant. One more time, when we're talking about and addressing market structure, okay, Novak, looks very simple. I will make tons of money. Well, step by step, right? Hopefully in a few years. Okay. You are not believing this, everybody. Nobody does, right? In the beginning, trading is an emotional skill, everybody. This is all intellectual. You know, this is all intellectual. Oh, no, yeah, it's easy, right? It's understandable. I'm going to take tons of money. But most likely we're going to take a few years, you know, but it's a learnable skill, everybody. You know, you can learn this. Okay. So vocabulary: relevant low, relevant high, relevant low, relevant high. Down structure: relevant low, relevant high. Okay. Now, rule. Okay. Now this is not a concept anymore. It's a rule. Relevant and lows are the border lines, or the borders, maybe, are the borders between And guys, if I'm doing some English mistakes, correct me, okay? Extensions and retracements. Okay, meaning borders between the short-term uptrends, short-term downtrends. Okay. Oh, let's make it bigger. 32, and click one more time, R, and something like this. Okay. So one more time, step by step. I get it. The more you know, the better. Yes. So one more time, right? What we are learning today is, number one, every currency pair has its own market structure, the blue line. And this market structure is going to be different on every time frame. Every time frame, you know, has its own market structure. Vincent, your English is very good. It's not my native language and I can understand you very well. Thank you very much. Thank you very much. Okay. And every market structure starts with an extension retracement. We could have an up market structure or a down market structure, right? And we are learning that every currency pair has its own short-term trend on every time frame. So, you know, today we are going to use EuroCAD. So the market structure on EuroCAD on the monthly chart is going to be different than the market structure on EuroCAD on the daily chart. And the short-term trends, the red line, are going to be different from the monthly, weekly, daily, 1 hour, 2 hour, 15-minute chart. Okay? Or NZD-CAD, right? We have a down structure on the monthly, but this down structure, the blue line, is going to be different from the monthly to the weekly, to the daily, to the 1 hour, 2 hour, 4 hour, 15 minutes. And the same goes to the short-term trend. You know, the short-term trend on NZD-CAD daily chart is going to be different than the short-term trend on NZD-CAD. Just an example, NZD-CAD 15-minute chart. Okay, and you don't want to hear this, everybody, but the smaller the time frame, the more challenging is to identify the market structure. Why? Because the smaller the time frame, the more times we are going to have a break of the market structure. Okay, so if the blue is market structure, just an example, and you are going to see the short-term trend making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. In order to have the down market structure, the market must not break this structural high. And when and if it breaks the structural high, and this happens a lot on the 15-minute chart, then you need to reverse your structure. Then you don't have a down structure anymore, you have an up structure. And the smaller the time frame, the more this is going to happen. Okay? And yes, let's not make it too complicated. You know, you're going to be sick and tired of me telling you lesson 2 or 3 times. Watch this lesson 2 or 3 times. You know? And talking about, hey, Passion, how can we identify, right, the relevant highs and lows, the structural highs and lows? We have a rule here. Relevant highs and lows are the borders between extension and retracements, meaning the borders between the short-term uptrends and the short-term downtrends. Okay? Now we're going to check the chart, everybody. Do you have any questions so far? Remember, don't be shy. You know, there is no right or wrong. You can ask any question you want. You can say, Passion, I don't agree with you. You know, not a problem. We are here to talk about. Everybody, any questions so far? Okay, if there are no questions, then we are going to check the chart. Okay, we're going to check the chart, and today is EuroCAD. Okay, EuroCAD, this is the monthly chart. For you, everybody, where should we start drawing our market structure? From the lower band? From the lower band, or should we start drawing our market structure from the upper? If you learned something from the previous 2 days. Everybody, where should we start drawing our market structure, from the lower band or from the upper band? Everybody, a lot of things, especially if you're a beginner trader, like, oh, why did I lose many times? You know, should we start drawing and trying to figure out the from the lower band? And don't be shy, everybody, there is no right or wrong, you know. You can say upper band, you can say lower band, not a problem. And one more thing, everybody, I perceive that I have a 20 seconds delay on the chat, okay? I don't answer in the very minute, just I have a 20-second delay, you know. Okay, where should we start this market structure? So this is theory, right? We are looking at the live market right now. We learned, everybody, right, that the market works like this. Is going to go from one band to the other band, to the other band, to the other. So where is the last time that the market hit the band? Did the market hit the lower band lastly, or did the market hit the upper band lastly? Vincent, lower, yes, sir. Okay. So, right, and on the monthly chart, it's quite easy, right? On the monthly chart, it's quite easy to track and to see the up structure, right? So, but I don't have the, I mean, it's difficult to spot the uptrend and the downtrend. I can see, I can take the low and I can say, okay, this is extension, right? This is now retracement, and we're going to color code differently. This is going to be retracement. Next extension, where the market must make a higher high, right, everybody? Okay, and then we have another retracement, different color one more time. Maybe it doesn't look like, but it's a higher high, everybody, in here. You know, you can check your highs and lows. So we have extension, retracement, extension, retracement, and we have another, let's change the color, another. Okay, so this is the up structure on EuroCAD monthly chart, everybody. Okay, this is the up structure on EuroCAD monthly chart. Now, trader, okay, good news for the beginner trader, everybody. Good news. This is good news for you. If the structure, if the market, right, let's say that the market, if the market is going to continue its up structure, it must not structure lows. This is good news, right? Good news. If the market is going to continue its up structure, it must not break the structure lows. Okay. So learn how to properly draw trend lines. So we can draw a trend line like this, everybody. Okay. And up in here, when we talked about theory, right? Up in here, when we talked about theory, same, you know, we have an up trend line in here, and we have a down trend line in here. Why are we using trend lines? You know, because some of you are arguing, right? You know, oh, let's buy the market. Wait a second, we need to see where we are with this downward retracement. Oh, it's not a downward retracement, it's an uptrend. It's not. We are in a downtrend, and the trend line is showing. Okay, beginner traders, you need to learn this kind of vocabulary. You know, we are in a downtrend. When you talk to a professional trader, you know, and you are saying, oh, we are in a downtrend, of course it depends on the trading style, intraday scalper, you know, but talking about structure, you know, oh, we are in a downtrend, we are talking about the blue one. Okay, oh, but here we are in an uptrend. We are not in an uptrend. This is a down retracement. Okay, but yes, you are smaller time frame. Yes, we do have a short-term uptrend. Passion, this is too complicated. I know. This is beginner stuff. That's why I'm telling you, watch this lesson 2 or 3 times. Pen and paper. Open your Excel sheet or Word document and try to learn and study the charts, guys and girls. You're going to see this happening, you know. And here is the same. You are going to have your friend arguing, no, we're in a trend, uptrend line. Yes, but it's a downtrend. It's not. Why we have trend lines if this is a downtrend? Trend line, what is a trend line? A trend line is a tool that confirms the trend, you know. So yes, we are in the short-term downtrend, but on the time frame that we are talking about, this is an up retracement. Okay. And one more time, you know, you can accept what we're teaching you. You can also reject, not a problem. Okay. There is no right or wrong. You can take what you like, everybody. Okay. Reject what you don't like, not a problem. Now, going back in here, this is the live market. This is the good news for the beginner trader. If the market is structured, it must not break the structural lows. What does this mean? This means that, so let's delete this one, everybody. So if I'm new to the Forex market, you know, this was the chart back in time, right? And I saw the lesson, and let's say that I bought the market somewhere in here, right? Not the best entry, I was late to the party, whatever. I bought this market in here. What do you think, everybody, is the best stop loss? I bought the market in here, and not like this. Let me, so arrow. Okay, I bought them. Where is the safest stop loss? We are talking that if the market is going to continue its up structure, it must not break the structural lows, you know. So where would loss, you know, would be the best stop loss level? Down here on the daily chart, you know. Oh, I have a 50 pip stop loss. Now you are going to understand, everybody, why your stop loss get hit so many times. Or loss down in here, you know. Or is the best stop loss, you know, I mean, all the stop loss levels are good, okay? There is no better to have a wrong stop loss than to have no stop loss. or maybe this place, right? And don't worry, everybody, we're going to spend a few days talking about market structures, trends. Okay, so I bought the market in here. Let's make a poll, everybody. What do you say? Which stop loss safest place? So stop loss number 1 is going to be this red up in here, and clone stop loss number 2. Click, you know, would be here, and clone one more time, and down here stop loss number 3 template. Click, stop loss number 3. Okay, everybody, together. I entered here, you know. I don't believe what Fxpassion is saying. I'm testing, you know, if the market is going to continue its up structure, it must not break the structure lows. You know, so where is the safest to put the stop loss? What do you say? Stop loss number 1, stop loss number 2, or stop loss number 3? And remember, don't be shy. There is no right or wrong. We are here to learn. FX Spider, stop loss number 3. Vincent, stop loss number 3. Anybody that wants stop loss number 1 or 2? Anybody courageous enough to say, oh, stop loss number 1, I have a 50 loss, or I'm using a 20 pip stop loss or whatever? Below the previous high. You mean previous low? Get it says number 2. Pink says number 2. Okay. No problem, low. Okay. So everybody, the correct answer is number 3. Okay. Number 3 is the correct answer. Now, what is the logic behind? No, don't worry, you know, believe me, this is better than, you know, why number 3? Because this is what we learned in the previous lessons, you know. So let's talk about, one more time, let's talk about trends, right? So if, you know, and if this is the extension, right? This is the extension, okay? This is the extension here. So, and I'm buying the market, it's going to be, and the same logic goes to selling a downtrend, you know. So this is the, you know, buy, okay? And the market starts to do something like this, you know, making higher highs, higher lows. The market does something like this, you know, which this is supposed to be a structural low, you know, the market pushed further down. Here is the question: did the structure change? Did the structure change, everybody? And let me see if I can compress the chart. So this is the difference between the stop loss number 3 and stop loss number 2. You know, exactly. It's okay. So good news. If the market's going to continue, it's abstract. It must not break the structure lows. So everybody, maybe it's too much information for one day. Stop loss number 2, yes, it's a low, but it's not a structural. Okay, why not? Here is the logic. Okay, what confirms the trends and structure legs are the next or new, you know, I don't know what is better, next or new highs and or lows that when they establish themselves, they confirm the continuation, the trend or structure. I should write the book, right? What confirm the trends and structure legs are the next or the new or low themselves, they confirm the continuation, meaning, you know, what is this? Is this an uptrend or a downtrend? You know, what is this? Is this an uptrend or a downtrend? And I'm going to give you the answer because we are getting out of time. Or a downtrend. And you're going to say, well, we don't know yet, right? Then I'm going to say, okay, now what is this? What is this? Is this an uptrend or a downtrend? You know, we have a low and we have a high and we have a low. And you're going to say again, you know, we don't know yet. So only the new, like in here, only the next or the new high or low in a downtrend, when they itself, this is going to be the confirmation that this uptrend continues or that this is an uptrend. Make sense, everybody? So, and this is why, yeah, I should watch this. Definitely, I should watch 2 or 3 times, right? Yeah, I should watch definitely this lesson 2 or 3 times. And this is why, you know, even though on the chart, live market, live chart, you know, even though back in time, you don't see the future when you trade, even though this was a low, you know, the market could still retrace further down, take you out, everybody, take your stop loss number 1 out, take your stop loss number 2 out, but that the structure changed. See? And this is the logic why stop loss number 3 is the safest place where to put the stop loss. Make sense, everybody? Too difficult information for one class? Any questions? And one more time, you know, you can say, oh, I don't agree, I'm going to keep my 20, 50 pip stop. It's okay. You know, you can accept what we are teaching, you can reject, take what you like, okay? But this is the logic why structural lows and structural highs are the safest place, okay? Now, let's see. So the market is moving up, you know, up, established a new high, right? Established a new high. How about mixing it with moving average? Moving average, okay? And you would mix, you need to backtest it. I'm not sure if I understand your question, but if you are asking that you would like to mix moving average with structure, you can backtest this. So the structural low to confirm the break, yes, sir. To confirm trend direction, Pink, great question. My answer is number 1. If you're a beginner trader, don't mix structure with trends. Okay? But either way, you need to backtest this. Okay? Everybody, trend direction, you need to be very specific. What are we talking about? Let's short, so let's change, everybody. Let's go to NZD-CAD, right? NZD-CAD, and one more time remove drawings. Okay, and the cat weekly chart. So you're going to see the short-term trends. Okay, just quickly, we're almost out of time. So upper band, lower band, right? And okay, daily chart, everybody. Weekly, not enough to see the short-term trends. Okay, daily chart, right? Chart, and I'm going to compress the chart. I'm going back in time. So this was structure back in time, you know, extension, retracement, let's colors, another extension. Down here, let's change colors. Now, another retracement. Let's change colors one more time. And let's test extension. What color? Pink, violet, okay. You know, so Pinky was asking a question to confirm trend direction. You must be very specific, everybody, because if you are saying, oh, trend, or let's short it down trend, and we are here, circle, you know, maybe we don't understand each other as traders, you know, like, oh, what we are talking about. Because you can have two different friends, everybody, and you do. Somebody's going to understand, let's trade this one, but somebody is going to understand, well, let's trade this one. Okay, this goes not just to Pink, but everybody. Be okay, but to answer, the best answer I can give you, Pink, is to backtest. Okay, now for today, everybody, talking about theory and the live market. Okay, so those are extension. Okay, now I'm going to connect the highs and the lows. No, not all of them, just the. Can you see, everybody, that the market in an extension, the market was making lower lows, lower highs, lower lows, lower highs, you know, and then start to retrace, you know, extension, retracement, extension, start to retrace, deep retracement. Let's change the color. Let me do like this. Can you see, everybody, that this is one story and this is another story? Can you see, everybody? And let me see here, what can we do? Okay, can you see, everybody, the short-term downtrend on the daily chart? The market was making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And then when the extension was the market, higher highs, higher lows, higher highs, higher lows. And you are going to find this, everybody, on every currency pair and every time frame. Okay, so your knowledge starting from today, before entering, you know, okay, scalpers excluded, you know, scalpers that are working just on candlestick formation, you know, they don't need to use this, or maybe yes, you know, but otherwise, you know, even intraday, sure to understand and have clarity on what are you going long on or what are you shorting, you know, because if we take this example here, everybody, you know, what did we really trade? We were trading a down retracement. Okay, those are one of the critical lessons, you know. We were trading a down retracement. Why is this helpful? Because talking about the stop loss, if the market is going to respect and continue its down structure, you know, it must not, it can retrace further, but it must not break this on the daily chart. But as we are saying, you have different structures on different time frames. And structural highs and lows, it depends, of course, on the strategy and the trading style. But so far, place on where to put the stop loss. You know, Passion, I don't believe you. Great, I loved it. I don't believe you. You know, those are the best to learn. You know, so let's go on the weekly chart. Weekly chart, weekly chart, weekly chart, weekly chart, everybody. So structure, extension, retracement, extension, retracement, extension, retracement, extension. Okay, of course, we don't see the future, right? But as you can see, everybody, if you would just put every time that you shorted the market, if you would put the stop loss on the previous, why previous? Because you don't see the future, and we just clarified you that the next leg, the new leg, is going to confirm the continuation. So if you would just short the market and put your stop loss on the previous structural high, even the last one, until today, would you be stopped out, everybody? Yes or no? It's a yes or no question, everybody. This is the question, you know. You are, or at least I am, you know, I'm a beginner trader. I have no knowledge about the market. And if I would short the market, this is just an example, but it happens on all time frames. If I would short the market, and if I would just put the stop loss on the previous structural high until today, would I be stopped out, yes or no? You know, I would be, and it depends on where I would enter the market, you know. If I would enter at the wrong place, you know, bad place to enter, I would be stressed, right? Because the market is going against me. But stopped out, the answer is no. The market would not stop me out. You would not be stopped out because the next high would be lower than the previous one. Exactly. Now, everybody, beginner traders, this is a probability game. Can the market stop me out? Absolutely yes. If the market, you know, is going to change structure, is going to stop me out. But so far, and this is where we are telling you that trading is a probability game, for the lack of a better word. You know, it's not a game, it's a job, it's a profession, you know. And one more, right? EuroCAD. Those are the, when we are learning how to trade, those are the easy ones to spot, you know. Daily chart, EuroCAD daily chart. I'm going to remove all the drawings, you know, EuroCAD daily chart and extension, retracement, extension, retracement. Same question. Until today, would the market stop me out if I would put my stop loss below the previous structure low? Every time you say, I don't believe, to some professional trader, check the charts. You know, check the charts. Okay. Talking about trading, right? Very slowly. Remember, these webinars are not trading or investment advice. We are here to learn, you know. Talking about trading and talking about the homework, right? This is a course. You have homeworks. Okay. Homework. Try to identify a structure on your pair of interest and your interest and demo trade. Okay, what do we mean demo trade? Put the stop loss above or below structure high or low in an uptrend up structure. Okay. Passion, what about profit take? We are talking about the stop loss first, okay? Profit taking, it's not relevant right now. Okay, one of the biggest reasons why retail beginners, semi-professional traders, and of course, this is a generalized, it depends on your trading style. If you're a scalper, intraday, day trader, swing trader, everything is a little bit different. But what we have found, is that one of the biggest, there are reasons, but one of the big ones is the wrong use of the stop loss. You have a great strategy, everybody. You have a great system. You are entering great entries, and the market stops you out because where is the best or safest place to put the stop loss? Not all stop loss levels are equal. The chart is showing you, right? If I would buy, in conclusion, right? If I would buy the market in here, back in time, if I would buy the market in here, back in time, I don't see the future. No. Looking here, talking about relevant highs and lows, this was a false breakout, right? And if I would put the stop loss down in here, the stop loss up in here, instead of me putting the stop loss down in here, I have a great strategy, great entries, I have great indicators, I have a great system, because I never learned the concepts on how the market works. And yeah, maybe I'm an aggressive trader, but still, I have the knowledge at least where are the safest places to put the stop loss. I would simply lose. We are going to learn how to form a strategy too, and you don't like this, you are not going to like this, but the stop loss levels, the exits, are the most important part of the strategy, not the entry. My kids can click a mouse and enter the market as you do. You are going to see moving average crossover, you are going to see the stochastic RSI, you are going to see the super JP Morgan Chase Forex unicorn robot entry. My kids are going to click the mouse, are going to enter at the same time, in the same direction that you are doing. The stop loss level are more important, And yeah, you can say, okay, Passion, I don't agree with you. Well, no, not a problem, Okay, everybody, this is all for today. See you back tomorrow, right? Oh, I don't like Fridays. Well, you're in a course. Fridays too, if you want to learn. And please watch this recording, everybody, this stream 2 or 3 times. I don't know how to download this, but, especially if you're a beginner trader. Don't learn, because I can call in 2 hours and ask you, John, what did you learn today? And you are going to be, I learned that, right? Robin, you would not be stopped out because the next resistance should replace our stop loss. This is a general question, Robin. There is no general answer. We are going to learn different stuff. Okay, everybody, our time is up. See you back tomorrow. Until tomorrow, stay strong and trade with passion. This is Fxpassion signing off.